Hi guys, welcome to another video tutorial. In today's video, I'll be teaching you guys about liquidity, what is liquidity, how you can take advantage of liquidity, and how you can spot liquidity, and also how to not lose when there's liquidity. Okay, so currently this is the gold chart, and I was doing an analysis on it before. So to explain this liquidity, I'll be using GPY because this is actually just a recent movement in the market. So go to GPY chart and currently go on the daily time frame. All right, if you look at this chart, you would see I already put a trend line. I have a psychological line, and I also have a highest high. Okay, I also marked the highest high. Okay, so I kind of previously marked this point. It's based on analysis, and I already also marked a demand zone. Okay, so what you notice is there's a dip at the end of the price movement. You can see that dip. Okay, and you can see my trend line, and you can see the dip cut through my trend line. Okay, you can see the dip cut through my trend line, but then there's a little rejection. It goes back up, and then it's kind of ranging basically. So you can just zoom in, and then I'll just go into the 15 minutes time frame, so you can see this dip better, and I'll go straight into explaining this dip. Okay, right before this dip there was liquidity. Okay, so I'll be explaining the liquidity in the 15 minutes time frame. All right, so in the 15 minutes time frame, we have more candlesticks, and each of the candlesticks are 15 minutes. But today we are focusing on liquidity. Okay, so I'm just going to zoom in and then adjust the candlesticks from the ruler on the right side. You just drag it to reduce the candlesticks, the height, and then get to see everything. So I zoom in, and then you can see that massive dip. At the same time, you see the psychological line. The psychological line I put, the trend line I put as well. Okay, so for the psychological line, it's basically already it's close to the liquidity zone, but I'm gonna have to show you the liquidity zone in more details. Okay, so you understand better. So if I go back to my daily time frame, you can still see the psychological line, the line in the middle, and then you can see that highest high point I marked and my trend line. Okay, I'm showing you this again just so you understand. I referenced all this in the daily time frame. Okay, I set a highest high. You can see the highest high point, at that time. Okay, in daily time frame. And then if I go into the 15 minutes time frame, okay, you can still see the lines. Okay, you can still see the highest high I marked. You can see the highest high I marked, and you can see the psychological line I marked. So what is liquidity? Liquidity is basically a point where buyers or sellers have set their stop loss. Okay, so in most cases the market would usually try to go against that particular stop loss level because multiple buyers or sellers have set their stop loss there. Now in this particular case, this is a sell side liquidity because you can see the market went what? It went bearish, it went down. Okay, it went on the sell. So this is a sell side liquidity. Now to spot the liquidity, we're going to have to look for equal lows. Okay, equal lows. That is how you spot sell side liquidity. In the case of buy side liquidity, it will be equal highs. Okay, now like I mentioned earlier, I already set a psychological line, and my psychological line somehow is close to the liquidity zone. Okay, but that is not the exact liquidity point. I'm going to reference the liquidity point with a horizontal line. Okay, so I'm going to show you the lowest lows. You can see the market movement right now. So now after liquidity, there's usually a kind of like an opposition in the movement. You can see the market is kind of like moving like downwards, and then it goes upwards, and all of a sudden starts to dip. Okay, and that's where traders get trapped. Okay, if you do not spot liquidity, you can go against the market and it would go against your favor. Okay, so you need to spot liquidity in time, and you need to mark your right entry point, because in this case your entry point would be at the point of liquidity. Okay, once the market gets to that liquidity point, okay, it sweeps through, you can actually enter a trade. Okay, so you can go in on a sell. All right, so I just choose my horizontal line tool from the left side, and then after choosing the horizontal line tool, I'm going to mark the the point of liquidity, which is the sell side liquidity in this case. Now you can see my horizontal line, it's touching at least 3 or 2 red candlesticks. Okay, their lowest points. Okay, now I can go into the 5 minutes time frame so you can see this better. And in most cases, trust me, you want to look into your 5 minutes time frame, your 3 minutes time frame, your 1 minute time frame, so you can actually even spot the liquidity better. It's easier to spot there because there are more candlesticks. And now in the 5 minutes time frame, you can see the horizontal line I placed. You can see we have one, that's the first bearish candlestick, then you see a second one and a third one. So we have 3 candlesticks on the same lowest point. Okay, they have equal lowest points, and I just reference that with a horizontal line in the 5 minutes time frame. Okay, now to actually mark a liquidity zone, you need to use the rectangular tool, because liquidity zone is not just a line, it's actually a region. It's more like a zone. Okay, so I'm just gonna mark that particular point in the 5 minutes time frame. Okay, where that horizontal line kind of touches those 3 lowest points. Okay, now take note, right after liquidity, like I said, there'll be an opposition. You can see the market goes bullish, goes up, and that's where traders get caught. Okay, if you not detect liquidity, you might think the market is about to go bullish, but actually the market is about to go into liquidity. It's going to sweep and go down swiftly. Okay, so now I've referenced that point and I've marked it the liquidity zone. Okay, now that particular zone is the liquidity zone. I have to drag it all the way. Okay, why I'm dragging all the way is because you have to wait for the market to get back into the liquidity zone. Okay, sweep right through, and then that is your entry point. Okay, that's like a sniper entry, so you're entering at the correct time. Okay, because once the market sweeps through liquidity, it will keep going down. Okay, and I can actually show you in full screen mode so you see how the market went right after it swept through the liquidity zone. Okay, you'll see clearly that after the market sweeps right through the liquidity zone, it's going to maintain a downward trend. All right, so let me just zoom in and show you the full chart. The full chart all the way down. Okay, let me just scroll through. Okay, reduce the rulers. Just reduce a little bit. You zoom in. Okay, all right, now you can see how far the market went down. Okay, now if you entered at the right entry point, like I said, you will be doing TP ratio. You had, like, say you set your stop loss just above the highest point, which is not too far, and then you set your TP all the way down. That'll be like 1 to 10. Okay, and that's about 1000 pips minimum. Okay, this is 1000 pips minimum movement. Okay, so if you enter this trade at the right point, you come out in massive profits. Okay, that's the one thing you need to know about trading. Okay, so I'm gonna just mark my short position because we're supposed to go in on a sell. Okay, obviously once you get to that liquidity zone, it has swept through, you go in on a sell, you mark your short position. Okay, now you can see I mark my TP level all the way down there. Now normally you probably would expect it to get all that far, but trust me, when market hits liquidity, it moves like this. Okay, because liquidity is like when bigger institutions are actually like selling. It's not like the individuals, like big institutions, the big players are actually selling right now, or they're actually buying if it's the buy side liquidity. So right now the big players are actually selling, and you see that dip. It's going to be a massive dip. Okay, you can see my risk to reward ratio is almost 7. That's like 1 to 7. So yeah, this is basically how you use liquidity to your advantage. All right, so if you look at my short position, you can see my risk to reward ratio is about 6.69. It's a very good risk to reward ratio. You can see where I set my stop loss just above the highest point. Okay, just in case the markets actually did go against my extrapolation, but since we swept through liquidity, it will definitely just keep dipping. Okay, and yes, so you can see my take profit level. Most likely you won't expect it to hit that level, probably just a little bit, maybe halfway through, but definitely this is actually how you trade. Okay, so you need to mark your right entry points and actually hit your massive take profit. You don't need to trade all the time, you just need trades like this. If you look out for liquidity points like this, is a very good trading strategy. Okay, so you can see the liquidity zone, and you can see after I swept through the liquidity zone, the market just kept deeping and deeping and deeping and deeping and deeping. It's about 1000 pips in movement minimum, I can guarantee that. So you can imagine the profit you would come out with depending on your lot size. So guys, we have come to the end of this video. Thanks for watching. If you enjoyed the video, like the video, make sure you subscribe and turn on your post notification so you do not miss my next video. Bye for now, guys.